Does that buying spree in the equity market continue?
I think it does. We're getting signs finally that the Fed is willing to say that they're finished raising interest rates. I think they will continue to push back on the aggressive amount of cuts that are being priced into the market for next year. But I think we've seen the equity market remain pretty resilient under higher interest rates, and that dynamic could very well continue over into the beginning of next year. So I think the buying spree does continue. Earnings have been better than anticipated. While we do anticipate a bit of margin pressure over the course of next year, we're still anticipating positive earnings growth. And lastly, you still have a lot of money sitting in money market funds, retail money market funds. And so once consumers and investors get a bit more confident about the outlook on equities, I think some of that money, that capital gets deployed into the equity market. So I think the buying spree continues from here.
So the shopping party continues, Jordan. We've also heard from Pinky Chada over at Deutsche Bank, who's the newly minted bull of Wall Street, calling 5,100 on the S&P 500 to end next year. That would be a record for U.S. stocks. Would you be so bold as to say that you also think U.S. stocks could hit a new record next year?
I think they can, right? We know markets spend more time rising than they do falling. If the word resilience continues through the end of 2023 and into 2024, I think we can certainly see the market continue to hit new highs, especially if you continue to have these bigger names of the index bring the market higher, along with a broader participation. You get broader breadth. Other parts of the market continue to do well. We have to remember, while this feels like a hated rally to a certain extent because it's been concentrated in a few companies, these are good businesses. These are profitable businesses. And so I think they're going to continue to make profits over the course of next year. You get that softish patch in the economy over the first half of 2024, followed by a little bit of easing of monetary policy in the back half. I certainly see an environment in which equities can continue to march higher.
So which ones are we talking about? Because I was really struck by the fact that small caps, junk bonds, like that's what's helping to lead this kind of rally. Is that what you really want to be doing? Is that where the buying should be?
Well, we know small caps are the high beta, the leverage play against the economy, right? And so if the growing consensus is of a soft landing, a period of sub-trend growth, but we avoid a recession, I think folks are going to want to be buying into valuations in small caps. Valuations look very, very attractive when you look at small cap valuations relative to large cap. But again, you have to be careful with that call because even though we're looking at a period of sub-trend growth, there could be anything that could be an idiosyncratic shock that can tip the economy into a recession. And so I think the sweet spot could actually be mid-cap stocks. Mid-cap stocks are that middle ground between they have higher earnings, so EBITDA ratios look a little bit better. They're not as leveraged. They're still kind of that beta play against the economy, but provide a little bit more diversification from a sector perspective than you would in the large cap space. So I think that sort of straight down the fairway call of mid-caps looks pretty interesting moving ahead to next year.
Well, large caps was clearly absent for your recommendations of next year. Jordan, why not go for the winners of 2023, the Mag 7, the large cap tech stocks? Why wouldn't you want to keep chasing that rally?
Well, look, I think these are still long-term holds, right? But I do think there is still scope for valuations to come down. One of the things that I think coming out of the December FOMC meeting, Powell is going to emphasize is that while they may be finished hiking rates more from here, he's going to push back on the notion of the aggressive rate cuts that are being priced into the market. And I think when you look at the rally in the month of November, just about all that rally has been valuation driven. And it's come under the expectation of lower interest rates next year. And so I think if Powell continues to push back, there could be scope for further downward pressure on valuations across the bigger names. Now, this is not to say abandon your tech altogether.
Right.
I think investors should embrace TARP, right? Tech at a reasonable price. And so I think it's not abandoning the big seven altogether, but it's having a little bit more balance.